All right, what is up, tycoons? Super excited for today's video. Going to give you guys an update on Ocean Protocol. Okay, ticker symbol Ocean. All right, we're looking at the daily chart. Going to give you guys all of the chart patterns that I'm currently watching, and then we're actually going to go through the history of the chart and break it down for you guys as well. All right. So the first pattern we had here was a rising wedge, right? This is a bearish pattern, all right? And you're going to see the price action zigzag in between here until we break this trend line on the bottom. Now, once we do that, you can expect to see a sharp move to the downside. And in a perfect world scenario, you're going to come down to right where the pattern started. And you can see we ended up hitting that price target, all right? Now, the next one we had was even more clear, and I'll go over why this was such a good trade for you guys to make. Okay. It's the exact opposite of this pattern, the rising wedge. It's a falling wedge or descending wedge, right? Indicated by the same thing. And you're going to look for a breakout of this trend line here. And in a perfect world scenario, it's going to go to where the pattern started. And you can see we actually went much higher than that. So it was really, really nice. Now, what made this trade much more, enticing to me, right? And why did I like it more? Is because we actually had two signals, right? So when trading, you can look at chart patterns as one signal for like possible future price movement, okay? But if we take a look at the relative strength index, we actually had a divergence, okay? We had a bullish divergence specifically. If you don't know what that is, take a look at these two circles right here. We have a low here, okay? And we have a lower low right here. So what that's meaning is that clearly we're in a downtrend. All right. So the price of this token is dropping, but the relative strength of it is increasing. Okay. At each point where we made a lower low, we actually made a low and then a higher low. So what this is saying is that the relative strength is increasing while the token is dropping in price. This is an indicator that traders use to give possible signs for, some bullish activity in the future, right? So not only do we have a bullish divergence, but we also have the nice wedge pattern, the bullish falling wedge pattern. Okay. So that's really, really what you want to look for. Okay. It's not best to really only have one tool up your belt, right? Trading is like going to war. It's like going to battle. You need to have as many weapons as you can, and you need to be prepared, to give yourself that edge. And that's really what's going to help give you an edge. Okay. So don't forget to smash the like button and subscribe to the channel if you're new to the channel, because I'm going to be dropping videos like this every single week. I drop about 5 to 15 videos, and I do viewer requests every single week as well. So if you like it so far, leave me a comment down below on a cryptocurrency, a token, a stock even that you would like me to analyze for you. I'll be happy to do that. Okay. So now that we've gotten that out the way, I'm looking at the potential future price movement, and I'm looking for any potential future patterns or signals, right? So currently there's no divergences. We don't have any divergences along the relative strength index, but what we do have is a very nice cup, okay? So notice we have this cup pattern. If we fall down and hold these three support levels right here, okay, which is going to be from 0.159 all the way up to 0.172, we're going to form a handle. So we've already got the cup here. And if we come down, bounce off of these levels, that's going to give us our handle. And the cup and handle is a bullish pattern, right? Now, again, I mentioned it's really good when you can get multiple signs and two or three things to align. Well, these three things are yellow right here. They are the Fibonacci tool. Okay. So what we have is I use this tool right here. Right. And I took the swing low up to the swing high right here, and nothing moves straight up or down. What they do is they retrace the movements. And you can look to see, are we going to get a retracement for a movement continuing up higher, or are we going to break through the retracement and possibly start a new trend in reverse direction, right? So what I mean by that is we're going up, we came up. If we come down and bounce at any of these levels, that's the perfectly healthy levels to retrace at for a continued uptrend up to our bullish price targets up to the top. Okay. So that's really what I'm looking for. We have to hold these three levels right here. If we break those three levels, we're going to come down and test these levels. All right. And if we are able to break above these levels and hold them, right? If we hold them and then bounce up higher, I'm going to be targeting these levels up here to the upside. Okay. So the blue line is the breakout line, and then the green is the bullish price targets. And same thing for down here, where the blue is the breakout line, and below there is the bearish price targets. Okay. Well, go ahead and zoom out and look at some of the history of the chart, and I can show you guys just all of the TA that I've been following and looking at on the chart and give you guys a really good breakdown and show you how these patterns have worked, how they can work for you as well, and how it's really not as hard as you think to start charting some of this stuff up. All right. So right here, we have the rising wedge pattern again, and we know from the previous pattern I showed you guys that it's a bearish pattern. And once you break this trend line here, you're going to get a sharp move to the downside. All right. And sure enough, we got that. Okay. Now also notice we have a high here and a higher high here. Look at the relative strength index. We have a high here and a lower high here. So a bearish divergence there where the price target, the price of the token is increasing, but the relative strength of the token is decreasing. So that's another great tool that I use, right? That I keep referring to is having multiple signals or multiple indicators to give you hints at the possible future price action, right? So we had a bearish chart pattern combined with bearish divergence. That's a pretty good sign that, okay, well, hey, maybe I need to be cautious. Maybe I need to take some profit if I haven't already taken profit. You could also call this an inverse cup and handle, right? Here's our cup, here's our handle, and then we break below that trend line and we get a sharp move to the downside and end up hitting this target right here for that inverse cup and handle. All right. Now we'll go forward into the price action and we'll go ahead and take a look at this next pattern, and it's known as a bull flag. Okay. There's a couple different ways to draw a bull flag, but for simplicity's sake, we have our flagpole here. Here's the actual flag itself. And once you get a break of this trend line on the top, you're going to see a very explosive move to the upside. Now, we did get that very explosive move, and we ended up forming bearish divergence shortly after that. Okay. So I have this one notated here on here. We have high, higher high, have a high here, lower high. All right. So as the price of this has gone up, the relative strength has been decreasing, showing you that, basically the token's price is getting weaker and weaker at these elevated price levels. Now, on top of that, we ended up forming a head and shoulders. So this is another example of having multiple indicators, right? So we see bearish divergence setting up, right? We have a left shoulder, we have a head, and then we end up getting a right shoulder after we get the drop, right? So here's the initial bearish divergence drop. And if you take a look, that was a very big drop, but not as big as the one we're about to look at, right? That was 52% roughly from the highs on that drop. And then if we look at where it ended up dropping total afterwards, we can see here, give me 1 second, sorry. All right. From the lows to there was down 83%. I mean, huge moves, and you had a very clear signal, right? So let's say you're like, all right, well, we already got the drop. Why would I be worried about this? Okay. Just because it's forming a right shoulder, what if that doesn't play out? What if it breaks out from there? Well, notice how we respect that trend line, right? So this is the point right here on the chart where we, spotted the divergence and spotted that, things were probably going to drop. Well, we did get the drop, but it came back up and it still respected that bearish divergence trend line. So until it breaks through that bearish divergence trend line, you can expect to keep it for it to like basically keep respecting it. Okay. Sorry, I'm getting a little tongue tied, but hopefully you guys are understanding this info and processing it. Okay. Over here, we have a bullish divergence on the chart, and we have a bullish chart pattern known as the falling wedge. All right. We're bouncing in between these areas, in between these trend lines. We're creating lower lows on the price action of the token, or we're creating higher lows on the price action of the token, and we get a very nice bounce to the upside. Okay. So notice here, again, how we talked about, it has to, how it'll still respect the divergence trend line. So here, we have our initial low and lower low. Now this isn't a lower low right here. Okay, it's very close to it, but we end up still respecting that trend line, right? So if we would have came here and bounced and broke through that trend line, we wouldn't have got this very big rally. But instead, we respected the bullish divergence trend line, indicating we may see, bullish activity in the future. And then we also respected the bullish chart pattern and got a very explosive move to the upside. Now, I want to highlight that the inverse head and shoulders, okay, is a bullish chart pattern, and we got one of those right here, okay. So I'll go ahead and show that for you guys. We have a left shoulder, we have a head, we have a right shoulder, and we get a very nice move, all right, taking us up to our price targets for this inverse head and shoulders. Now, shortly after that, we start forming some bearish divergence, and that's when we get some really big drops. So it may seem a little bit repetitive, but I just want to show you how much these things have been respected, right? Divergences and then combining them with chart patterns, how much it can really give you an edge, right? So we see higher highs, we see a high, we see a lower high, all right? And it's sure enough, we get a nice little drop. We take the highs right here down to those lows, 40% drop. Now we continue making higher highs, and then we actually make a high and a lower high again. And look how we're respecting that trend line. Okay. And we keep getting rejected and keep getting a push down each time it's respecting that trend line. All right. Ultimately, that was a very, pretty big drop as well. Over 58% for sure. We ended up dropping even lower. Right. And then here we get our bullish divergence, low, lower, low, low, higher low. We get a very nice move to the upside, right? From those lows up to those highs at 95%. All right. These are big gains, right? On both sides. So let's say, you're in these plays up here and you've been riding this momentum and you were able to capitalize up here and take some profit, you would have lost out potentially if you would have panicked. You would have lost out on 40%, right? So if you put 10 grand in this and you're up, 10 grand, or let's say you're in 10 grand of profit right now, okay? And then you're like, should I take profit or should I hold on to it? Does it have another leg? Well, you see the bearish divergence and you see that, okay, it ended up resulting in a 40% drop on the price. That 10 grand would have turned to 6 grand, and you could have panicked right there at that moment, and sold, potentially at the bottom because you were panicking and didn't want to, give away any more of your profits. All right. We'll go over here and we'll look at some more. Well, this is actually right where we began. Okay. So, we had the rising wedge pattern that we looked at in the beginning. We had the falling wedge pattern that we looked at in the beginning, along with the bullish divergence. Very nice breakout. We see some red candles right here. That's very expected. Okay. We're looking for a retracement. We're looking to bounce off of these three levels and push up higher. If we break through those levels, then we will head to the downside, right? So it's basically going to look like this. We're either going to have this move like this, okay? Or we're going to get boom, 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 boom. All right. So that's it. That's the update for Ocean Protocol. If you made it this far in the video, thank you so much. You're really going to enjoy one of these next videos, but don't forget to smash the like button and subscribe to the channel.